Hey guys, Mike here. So what an interesting day in the market, especially the last 30 minutes. Oh my goodness, I will show you how crazy this is, and I'll guarantee you somebody's going to put in the comments that they made a crazy amount of money just in the last 30 minutes. It was stunning. I'm actually doing some more research into this subject because it was something that caused it to happen. One of our members pointed it out to me. So kudos to him, and I'm going to do some more research and see if I can figure out how to play that in the future because it was just absolutely nuts. We'll also go into some data, 3 charts that just show you why China is throwing everything they can at their own economy and market, and also one thing to be very careful of. It's going to be interesting how this works out because all of a sudden you got this crazy momentum, but you saw some weakness today, and something else is going to be happening for the next week. So make sure you hear about that. But I will say this, that we did get some econ data out, and it was like, okay, here we go. Dallas Fed Manufacturing Index down only -9 versus -10, right? New orders down -5. Hey, not good, okay? And you can see in the chart, nothing good going on here, right? Still in contraction, but is it heading in the right direction? That's what people are trying to figure out on this. You keep seeing the data all over the place, but the manufacturing is just still a complete mess at this time. We'll see if it's bottomed or not. The big one, Chicago PMI, up to 46.6. Guess what? That's still in contraction. But it wasn't 46. Hey, new orders fell at a faster pace. Employment fell at a slower pace. Production fell at a faster pace. Prices paid rose at a faster pace. So not really good right there. You can see it on the chart. I mean, that's where we're at. But hey, are we bottoming? Is this going to start going back up? It's going to get out of contraction. That's what we got to find out. But again, it's the last day of September. We're going into October, very risky month. And there's 3 things to look at here. One is the port strike, which I'll talk about in a minute. The other one is potential tax loss harvesting from funds. And then the election uncertainty. Obviously, we've already talked about that. Sort of blew in the face. Now, when it comes to this port strike, we'll see if it happens at midnight tonight. I don't know what's going to happen. Who knows? But it's a lot of workers, and you're talking about 36 ports being affected here, and it really comes at the worst time. And I would really feel it's something like salt in the wound for the people in the Carolinas and Georgia, on the Gulf part of Florida over there, because I don't think you want ports being shut down for a long period of time at this point in time. And so that would be, I think it's like $5 billion today the economy loses if those ports shut down. So we'll see. If you happen to have any knowledge of that, feel free to put it in the comments or any inside knowledge on that. That'd be cool. Now, when you look at this right here, as soon as Jerome Powell spoke, don't forget he spoke today, the market started puking, right? I mean, immediately. And so, but it was nothing but manipulation down. That's all it was, right? And then something happened, which I'm going to do more research into. And then you just saw this crazy move back up. But this one right here was it, man. Look at this right here. The last, 22 minutes of the day. I mean, you saw it go up 0.67%. And there was a strike on here, a 0 DTE. I believe it was the 57.50, I believe, on the SPX. Went from 10 cents to $29, which means if you would have bought, basically spent $1,000 on 100 calls, then you would have made $291,000, roughly. That's kind of the guesstimate there, in about 22 minutes or so. So that was just nuts. And you can see kind of in the month, like what they were buying and what they were selling, right? So real estate, the Mag 8, energy had a good day, healthcare, industrials, utilities had a good day and stuff like that, even communications. And then when you go over and see, you go, okay, well, what were they selling? And obviously you got your travel stocks for number one. Semiconductors, kind of surprising, right? Jets, which is up huge the other day, which is your travel stocks and everything. And you can see the others for yourself, okay? Now, what I'm looking at to see here is, okay, do we move up? And you'll understand why I'm not really sure because of something that's happening here, okay? Because one is you're going to have the, I believe Shanghai, is going to be closed tomorrow, okay? I assume maybe they're still doing futures over there. I don't live in that country, so I don't know. Let me know if you know in the bottom. But if we move up, what you'll be looking for, and what a lot of people are looking for, is sales, okay? And what I mean by that, because if they move it up overnight especially, or want to wait to open, then what you're going to see here is a move up into where? The golden pocket area retracement, maybe even the 0.79 area right there. And then you'll see people try to move in for sales, most likely, if that happens, okay? Again, it's the start of a new month. And so like you saw the fiasco stuff today, we'll see how this new month's going to play out. Remember, the win rate for election years in October is worse than any other month. Believe it or not, it's actually worse than September, which is kind of crazy, but that's the case. All right, so if it gets above that little box, you do have those fair value gaps right there, which of course we can get the sell off from there. But we'll see. That's what I'm actually looking for, to see if that happens. If we end up moving back down, then look for buys as we move back down. But that's what I'm looking for. Now you see SPY once again holding that trend line. What was that, 4 or 5 days out of 6 now? Doesn't break below it. The Qs, same thing. The bears just can't really get that extended push down. They try, just does not happen. And so again, the Qs held where they needed to hold to. If that line breaks, that gap right there we marked out a few days ago, that's where you're looking to go to, right? Again, this is the move on the Qs. It mimics NQ, of course, which I just showed you on the futures. And this is what some people call PO3, right? So you're going to do accumulation, manipulation, distribution, all that fun stuff. So, and you saw it right there. I mean, what a V-shaped recovery that was. And, looking at the Qs right here, once again, you'll see this in a couple of these charts we're going to show right here. But, some people call this a bull flag. Some people call it a falling wedge, pennant, whatever you want to call it. Again, I always say don't worry about the name of it or whatever. But you can see it looks like it's trying to break out today, right? So we're going to see if that's going to continue on the hourly chart at least. And we'll get some follow through on that. Again, this one's way behind the S&P. It still hadn't reached all-time highs. We all know that right there. So it is trying to play catch-up, and if they keep moving into the Mag 8, it's definitely going to catch up, right? You look at IWM, we talked about this last week. I don't care if you call it a bull flag, falling wedge, whatever you want to call it. It was like on the hourly time frame as well. It's trying to break above, trying to move out of this right here. And so we'll see if that's going to get continuation tomorrow. We've seen this many, many times on the IWM, on the Qs, and all that fun stuff. But that's what you're looking at. You see the same thing on who? See the same thing on Apple. I put this up here a long time ago. And so you end up there with this formation. And all of a sudden it breaks out today. And what's funny, I was looking at this thing, well, how much farther do we got to all-time highs? And I was like, oh, wait a minute. Not very far at all. And you go to the weekly, because right there is all-time highs within that formation. So it is, I mean, can you believe this? We're going October, and Apple is only 1.3% away from breaking to an all-time new high, right? Isn't that amazing? And so there it is again. And that's why it hadn't moved up like other Chinese stocks, even with the exposure to China, because it's already up there, right? It's not beat down. Tesla, once again, just grinding this channel for the 5th day in a row, I believe that is right now. Ran into resistance at that 265 area. And so this one is very simple. Get rejected from here, going to come back down probably anywhere 248, 251, somewhere in there most likely, if that be the case. And we start seeing the weakness and volatility we normally do get to see in October. Then obviously didn't happen in September. And when you look at the RSI on this one, you can plainly see, you would think it's overbought, like people would tell you that, but it's not. On the daily at least, I mean, even on the weekly, but it's not. Even with this move up, because of the way it's moved up, unlike it did when it went up in July, it's just been a slow grind up. So it is not overbought. It has room to run, right? And if it does finally break up above the 265 area, then that right there around 276 is going to be the next resistance, right? If we continue to move up on this thing. And it seems like, again, they just keep grinding it up to that October 10th robo-taxi date, which of course we still have marked out. So we'll see if they're going to continue to move this up or not. And as usual, it would not be a day without some kind of Chinese stimulus plan or something. So here we go. China Central Bank tells commercial lenders to start cutting rates on existing mortgages. That's nuts, right? But understand the reason why they're doing this, folks. Let's look at these 3 charts. China's youth jobless rate hits record for second month, 21.3%. That is not good. These are 16 and 24-year-old people, right? You even exclude the ones that aren't in school, 18.8%. That's not good. Been going up since 2018. So again, these policies that they've had in place for 2 decades that you're starting to see in these charts, and why they're in such big trouble, right? The unemployment rate as a whole skyrocketed 2018 and 2019. Ended up coming down some, they said, but then you're right back up to 5.2%, which is probably not good, right? This is the one that gets me the most. China's population shrinks faster. Death rose while the number of births fell to record low in 2023. The top up there, that is births. Okay, and you can see that does not look good. Not for where the country is supposed to be growing at the rate they're supposed to be growing. Look at the drop off after 2015. Then you look at deaths. Can you see it in there? Been rising steadily since 1980. And then all of a sudden you get this big spike up as your births fall off. Okay, obviously we know what happened. 2020 happened, right? But then, that's why they're doing all this stuff, right? And so that's why they're doing all this stimulus, because they can't correct the demographics. They just can't do it, okay? Now, obviously, what's interesting today is the markets for Chinese stocks started off super hot, 3 to 5% up again on that news. But they gave most of it if not all of it back, and some of them even went red. You can see the Shanghai CSI 300 rolling 5-day game. They've never seen anything like it, right? It's just absolutely exploded. I think HSI itself, the index, is up like 40% in just a couple of weeks or something. You can see it right there. We'll call this right here another stimulus gap. We'll add another one to it. I believe that is the 4th stimulus gap, maybe the 5th one. Maybe I missed one, but that's HSI. So just absolutely just going nuts right there. And you start scrolling down, you're like PDD. This is a big one people love to look at right here. We'll see if maybe this right here is going to get rejected, this trend line, or maybe that was. Maybe I kind of moved down today after these. This is another one. I think it's up 40-45% as well in like 7 days or something, which is just a crazy move and stuff. And congrats to anybody with calls, or I've been trying to play some calls on some of these, and it worked out great. But I don't own these stocks and stuff. But if you do, let us know in the comments. And then we go back to HSI, you can kind of see it's at the 200 weekly moving average. So it hit it, got rejected there. You can see in the past where it has been good support. Some rejections off of it, but it's the first time it's hit it since 2021. And so it's been quite a while. So we'll see if maybe you finally get this pullback after such a just crazy move up. But understand, this was really nuts. Is all this momentum, and the China stock market will be closed over the next week to celebrate a holiday. And then I think, is it Shanghai or Hong Kong? I think it's Hong Kong. Their stock market's closed tomorrow as well. And that's what I was saying. I don't know about the futures, because I assume they still play futures over there. I'm just not sure. I know America will do that on holidays, but I don't know how those other countries work. Let us know in the comments if you do. One to watch out for, though, for another breakout is IGV. You're probably saying, well, what the heck is IGV? Well, it holds the tech software company. You see Adobe, Salesforce, Oracle, Microsoft, Intuit, ServiceNow has been on a crazy run. CrowdStrike right at the bottom. But just those top 5 or 6 stocks makes up almost 50% of them. And they've been doing pretty well. And so this finally sitting there. And so it could, and so put it on your list as a breakout candidate. So it seems like everything else has been breaking out as well. And there's a lot of good companies in there. So now looking at earnings real quick. You're going to look at paychecks in the morning. But really it's going to be all about Nike at nighttime. And so we'll see, because they got a lot of China exposure, right? And so we'll see if this one right here continues to get bought up. You're also going to end up with a lot of data. Okay, you got manufacturing, ISM manufacturing PMI, JOLTS job openings, ISM manufacturing prices, construction spending, and then 1, 2, 3, 4, 5 Fed speakers. Oh boy, look at that one right there. And of course, all of them have been saying, hey, yeah, we're open to 25 to 50 basis point cuts. And even Jerome Powell did say today, don't be expecting 50 basis point cuts all the time. We're not on this certain path of like, this is what we're going to do. We're just going off the data. And he swears the job market is stronger than they think it is, but they're watching it. The economy is really strong. And so, again, put in the comments if you believe anything he said today, but that's kind of where he's at. So, anyway, hope you guys got something out of it. Please hit that like and subscribe button. Feel free to sign up for the membership right there. A lot of you have. Really appreciate it. You can see everything you'll get right there. And then I will end up seeing you guys tomorrow for another fun one.